Let's not beat around the bush. If you are paying cash into your bank account, a silent check is happening right now. I'm not trying to scare you, and this isn't a conspiracy theory. This is the reality of modern British banking. Every single day, honest people walk into their local branch or their local post office to deposit cash. It might be $3 grand from selling a used Caravan.
It might be some cash that children gifted them for a birthday.
Or maybe they're just moving their own hard-earned savings from one account to another to get a better interest rate. And they make one simple, instinctive decision. A decision that feels completely sensible. They think, I'll just keep it tidy.
I don't want to make a fuss at the counter, so I'll pop it in bit by bit.
That single decision is the exact trigger that turns perfectly clean, legal money into a locked bank account. It leads to letters from government departments you've never heard of, and in the worst cases, the state simply keeping your money. I've watched it happen to people whose only crime was trying to be careful. So over the next 15 minutes, I'm going to make absolutely sure you never make this mistake.
But first, a quick legal disclaimer. I'm George, a chartered accountant here in the UK, but please remember, I'm an accountant, not your accountant. Everything I share today is for general educational purposes. Always seek professional advice before making major financial decisions. Now, before we go any further, let's address the single biggest myth about cash deposits in the UK. It's a misunderstanding that comes straight from American television, and it is causing real damage here. Many people believe there is a magic number, typically £10,000, and as long as they stay under that threshold, no one is watching. In the United States, that is actually true. Their banks are legally required to file an automatic report the second a cash deposit hits $10,000. But we are in the UK. We do not have that automatic system here. There is no magic threshold where a form is automatically sent to HMRC. So, if you've been panicking about crossing a specific number, you can put that worry aside. But please, do not mistake the absence of an automatic form for lack of interest. The British banking system is actually far more discretionary, and that discretion is precisely why it is so dangerous if you don't know the rules. Let's break down how the UK banking regulations actually operate behind the scenes. Our entire framework relies on a primary piece of legislation known as the Proceeds of Crime Act 2002, which professionals in my field simply refer to as POCA. Under this law, banks, building societies, solicitors, and accountants have a strict legal obligation. If they know, or even have reasonable grounds to suspect, that any money passing through their hands could be linked to unlawful conduct, they must report it. They do not report this to HMRC. Instead, they submit a file to the National Crime Agency. This file is called a Suspicious Activity Report, or a SAR. And unlike the US system, there is absolutely no minimum limit for raising a SAR. A cashier can raise a report on a transfer of 200 quid if the transaction looks out of character. Equally, a £50,000 deposit might go completely unnoticed if it is accompanied by clear, verifiable documentation. It is never about the amount of money. It is always about the behavior surrounding it. The computer algorithms used by financial institutions are incredibly advanced. They are programmed to scan accounts for one specific indicator: any behavior that suggests you are trying to stay under the radar. And this brings us to a specific term that has caused immense distress to honest UK taxpayers. That term is structuring. Some people call it smurfing, but it is a very serious issue under POCA. Structuring is the act of taking a large sum of cash and deliberately splitting it into smaller, separate deposits over days or weeks to avoid attracting attention. For example, depositing £3 on Tuesday, $2,000 on Friday, and another £3 the following week, perhaps using different branches or post office counters to mix things up. You believe you are being discreet and avoiding unnecessary paperwork, but to the bank's automated compliance software, you are behaving exactly like a criminal trying to launder money. And here is the hard truth. The algorithm cannot tell the difference between your honest savings and proceeds of crime. It does not know you just sold a private Caravan or that your kids gifted you cash. It only sees a pattern of suspicious cash deposits. And once that pattern is flagged, the serious consequences begin. The most common and devastating tool used today is an account freezing order, which was introduced under the Criminal Finances Act 2017. Over the last few years, these orders have become incredibly common. Here's how it happens, and it is a sobering reality. An enforcement officer from the police, the NCA, or HMRC can apply to a local magistrate's court to freeze your account. They don't need to go to a high court with senior judges.
They only need the balance to be over £1,000. And the legal threshold they must meet is low, just reasonable grounds to suspect the money might be recoverable property. They do not need a criminal conviction. They do not need to arrest you. They don't even need to charge you with a crime. Even worse, this application is made without notice, meaning you are completely kept in the dark. You will only find out when you try to pay for your groceries at the supermarket and your card is declined. And when you call the bank in a panic, they will refuse to give you any explanation. This is not because the customer service agent is being rude or unhelpful. It is because of another law under POCA called tipping off under Section 333A. If a bank employee tells you that a suspicious activity report has been raised or that your account is under investigation, that employee has committed a criminal offense. It carries a penalty of up to 5 years in prison, so they are legally gagged. You are left in a terrifying limbo with your accounts frozen and no one allowed to talk to you. Let me tell you about a client who walked straight into this trap. I'll call him Albert to protect his privacy. Albert is a 72-year-old retired gardener in Yorkshire. He is a widower and spent over 30 years doing small garden jobs, always declaring his income but keeping his spare cash in a safe at home. When he decided to downsize his house, he wanted to deposit this cash, around £15,000, into his account. His well-meaning nephew gave him some advice. Don't put it all in at once, Uncle Albert. It will trigger an audit. Just deposit £2,000 or £3,000 at a time. So Albert spent 5 weeks depositing £2,000 at a time, sometimes at his local branch, sometimes at the post office down the road. He thought he was being sensible and protecting himself. In reality, he was presenting the bank's algorithm with a textbook case of structuring. His account was frozen. Because the deposits were spread across weeks and locations, he had no single receipt or document to explain where the 15 grand came from. He just had a cardboard box of old, disorganized invoices. It took Albert 4 months of absolute misery, a solicitor he couldn't afford, and massive stress during his retirement to get his money unfrozen. He eventually got it back because the money was entirely honest, but the toll on his health was severe. And the sad thing is, if Albert had simply deposited the entire £15,000 in one single transaction with his old tax returns and bank statements in hand, he would have been completely safe. The very thing his nephew warned him about was the exact action that would have protected him. So let me turn this around now, because I never want to leave you frightened without giving you the cure. And the cure is wonderfully simple. It is, in fact, the exact opposite of what most people's instinct tells them to do. The rule is this: deposit it all at once and let your paperwork do the talking. Your paperwork is your armor. It is the single most important protection you have in this entire arena, and almost nobody bothers with it until it's too late. Let me take you through the situations where this actually comes up in ordinary life, because these are the real moments where good people make the wrong call. Let's take these 5 situations in order. The first is selling something private and valuable for cash. A car, a caravan, a motorbike, a piece of jewelry, or a collection of something you've built up over years. Say you sell your car privately for $8 grand, and the chap pays you in notes. It is a perfectly normal, legal transaction. The wrong move here, the absolute classic mistake, is to pay in $4 grand, wait a week, then deposit the rest because you've heard that keeping deposits small is the careful thing to do. It isn't. The right move is to pay the whole £8,000 in as a single transaction and let your paperwork do the talking. What is that paperwork? A simple bill of sale. It should list your name, the buyer's name, the date, the vehicle registration, the amount paid, and both of your signatures. Keep in mind, the cashier is required by the Financial Conduct Authority, or FCA, to verify where the funds came from. They might even cross-check the vehicle details with the DVLA to make sure the transaction is legitimate. When you stand at the counter and they ask where the cash came from, you simply say 5 words: "I sold my car privately," and you hand over that bill of sale. That is the end of the conversation. The second common situation is a cash gift from a family member. This is where people make massive mistakes, usually because they are confused by online rumors about UK tax laws. Imagine your daughter has had a very successful year and decides to gift you 10 grand to help pay for a new boiler or a special trip. It doesn't matter what the money is for. There is a massive amount of misinformation about gifts on the internet. So let's set the record straight in plain English. In the UK, receiving a cash gift from a family member is not taxable income. You do not pay income tax on it, you do not declare it to HMRC on a tax return, and you are not taxed just for receiving a present. The only tax that can ever touch this money is inheritance tax. And that only applies if the person who gave you the cash passes away within 7 years of making the gift. If they die between 3 and 7 years, there is something called taper relief, which reduces the potential tax rate. But even then, it is the responsibility of their estate's executor to handle the tax calculation, not a bill that will land on your doormat. So, how do you deposit it safely? You walk in, pay the £10,000 in one go, and ask your daughter to write a simple note. The note should state her name, your name, the date, the amount, and this sentence. This cash is a gift, given with no expectation of repayment. That note takes 2 minutes to write, costs nothing, but it is the ultimate protection for your account. The third situation is transferring your own savings between banks. This is highly frustrating because it catches out people who are simply organizing their affairs. Perhaps you are consolidating multiple old savings accounts because managing them is too much work. Or maybe another bank is offering a much better interest rate on your money. This is your money. You have already paid tax on it, and you are doing nothing wrong. But because of GDPR and strict privacy laws, banks do not share your account histories with each other in real time. If you withdraw cash from one bank and deposit it into another in small chunks, the new bank has no idea where it came from. If you transfer £2,000 one week, $3,000 the next, the automated monitoring software flags structuring, just like it would for suspicious cash. The solution is to move the money via a direct bank transfer where possible. If you must deposit it as cash, make sure you keep the statement showing the withdrawal from the first bank and the receipt showing the deposit at the second bank. Your paper trail must clearly show the cash exiting one account and entering the other on the same day. Keep the trail clean, make one deposit, and the system will pass you by. The fourth situation is receiving cash from an inheritance. Suppose a relative passes away and leaves you 15 grand from their estate. For almost every family in the UK, there is no tax for you to pay on receiving an inheritance. Inheritance tax is always calculated and settled by the executor of the estate, using the deceased person's assets before any money is distributed to the beneficiaries. The money you receive has already been through that process. If the executor gives you a bank transfer or a check, it is simple. But if for some reason it comes as cash, the danger of structuring is identical. Paying it in slowly will trigger the software. The rule remains, make a single deposit of the entire 15 grand and present a copy of the grant of probate or the letter from the solicitor handling the estate. File it, show it to the teller if asked, and sleep soundly. The fifth situation is a large, legitimate lump sum from an official source. This could be a backdated state pension payment if you deferred your pension. It might be a tax-free cash lump sum from a private pension provider, a matured insurance policy, or a legal compensation payment. The money arrives quite properly in a large single amount. The primary mistake people make here is panic. They see a large balance in their account, worry about the taxman, and start moving it around to different accounts or withdrawing it in small amounts. This sudden shuffling behavior is exactly what triggers the bank's alarms. Leave the money where it is. The Department for Work and Pensions, the insurance company, and your bank all have digital matching records for these official transfers. Do not create a problem by trying to hide or spread out a perfectly legitimate sum of money. Now, let's talk about a few practical realities that have shifted recently, because the ground has genuinely moved under our feet in the last year or two, and you ought to know about it. The first is that banks have quietly brought in their own limits on how much cash you can pay in. This is quite separate from criminal reporting. These limits vary enormously from one bank to another, which catches people out. Some of the larger banks will take 20 grand a day at the counter. Others have set the limit on personal accounts as low as 5,000. And paying in through the post office, which a great many people now rely on because their local branches have shut, often comes with its own lower cap. Some banks restrict post office cash deposits much more tightly than their own branches, with annual limits as well as daily ones. The regulator, the Financial Conduct Authority, has been leaning on banks to tighten these limits to make money laundering harder. So if you've got a genuinely large sum of cash to bank, the sensible thing is to ring your bank first and ask 2 questions. What is my cash deposit limit? And what documents would you like me to bring to evidence where it came from? A 2-minute phone call can save you an embarrassing trip and a refused deposit. The second recent development concerns debanking. This is when a bank arbitrarily closes your account or refuses to deal with you. From April this year, new rules came in to protect customers. Under these regulations, banks now have to give customers proper notice and a clear explanation before closing an account, with limited exceptions where a live criminal investigation makes that impossible. This is a massive improvement because for years, people had accounts shut with no warning and no reason given. It doesn't override the tipping off rules I mentioned, but for ordinary closures, you now have far more right to an explanation than you used to. The third thing concerns the taxman specifically, because people often muddle up crime reporting with tax. HMRC has a power called a Financial Institution Notice, or AFIN. This allows them to go directly to your bank and demand your financial records without needing to ask you, and without needing your permission. And the bank is not required to tell you they've handed your records over. Now, this isn't about cash deposits as such. It's a compliance tool, but it underlines the same lesson from a different angle. The authorities, whether chasing crime or chasing tax, can see far more of your financial life than most people realize. And they can do it quietly. Which means the only sane strategy is to make sure that anything they see tells a clean, consistent, and honest story.
You cannot control whether they look. You can absolutely control what they find when they do.
Let me give you a few words now on what to actually say and what never to say when you're standing at the counter with a large cash deposit, because this is where I see the second most common mistake after structuring. The cashier asks you where the money came from. This is completely normal. They are trained to ask. It is part of their job, and it isn't personal. The correct response is short, honest, and calm.
One sentence. I sold my car. It's a gift from my son. Or, I'm consolidating my savings. And then, you hand over whatever bit of paper backs it up. What you must not do is two things. First, don't ramble. Don't launch into your whole life story, your late wife's estate, or the falling out with your brother. The more you say, the more there is to write down on the file. And a long, anxious, rambling account reads very differently on a bank file than a calm, single sentence. Second, and I cannot stress this strongly enough, never say anything like, I didn't want to go over a limit. Will this get reported? Or, is there a way to do this so it doesn't flag up? Those words are absolute poison. They can end up written into the very suspicious activity report you are trying to avoid, because they sound exactly like someone who knows about the rules and is trying to dodge them. And if a cashier ever offers to break the deposit up for you, and very occasionally a well-meaning one might, the answer is always no. Pay it in as one single lump sum. And if the worst happens, if you ever get a letter, or your account is frozen, or someone from an official agency contacts you about your banking, I want you to remember one thing above all else. Do not try to explain yourself to them on the spot. Do not sign anything. Do not answer detailed questions in a panic, however much you want to clear it up and however certain you are that it is all a misunderstanding. You say one thing, that you would like to take professional legal advice before responding. And then you find a qualified solicitor who deals with this kind of work, specifically proceeds of crime and financial matters. The instinct to immediately prove your innocence by talking is completely natural, but it is almost always a massive mistake. Get proper, regulated help first. Because here is the heart of all of it, the thing I most want you to walk away understanding today. The report is not the crime. The bank's watching is not the crime. The whole framework, POCA, the SARs, the freezing orders, the bank limits, none of it exists to catch a retired citizen depositing their honest savings. It exists to catch drug money, fraud, and the genuinely dirty cash that washes through this country. The trouble is that the automated algorithm cannot tell the difference between a criminal hiding money and a frightened pensioner taking bad advice from a well-meaning nephew. It sees behavior, not intentions, and the single behavior that makes you look like the former is breaking your money up to avoid attention. Deposit it whole, keep your proof, and tell the simple truth. Before I let you go, let me give you something practical you can do this very week in about 5 minutes that will protect you for the rest of your life. Start a folder, paper or on the computer, whichever you are comfortable with, and call it something simple. Money, proof of where it came from. And from now on, every time a meaningful sum of cash lands in your account, anything more than a few grand, put 3 things in it. First, a single line of your own writing. Received 8,000 quid from my daughter as a gift, 14th of June, dated in your own hand. Second, the document that backs it up, the bill of sale, the gift note, the probate letter, or the pension statement that proves the source. And third, the bank statement or transfer confirmation showing the money going in. That's it. That folder is your entire defense. And the beauty of it is that you will almost certainly never need it.
But if you do, if the taxman or the bank questions a deposit from 3 years ago, you will be extraordinarily glad you spent those 5 minutes, because you'll be able to settle the whole thing with one folder instead of 4 months of absolute misery. The rules apply to everyone equally. But the people who keep their records clean and their deposits whole are the people who sleep soundly because they know the answer is sitting in a folder in the drawer. I've seen too many good, honest people dragged through stress they never deserved simply because nobody ever sat them down and explained how the banking system actually works. So, if you know someone, a parent, a neighbor, a friend, who is about to sell a car or come into a bit of money, do them a real kindness and pass this video along to them. A quarter of an hour now genuinely can save someone months of worry later. And do tell me down in the comments, have you ever paid a large amount of cash into your bank? Did the cashier ask you where it came from? How did you find the experience? I read every single comment, and the situations that come up most often tend to become the next video I make. If you want more of this kind of plain English UK tax advice, hit the subscribe button and turn the bell on. It is probably the cheapest insurance you'll ever take out. It costs nothing and might save you from an inquiry you didn't see coming. And finally, the usual honest word from me. I'm an accountant, not your accountant. Everything I've shared here is general education to get you thinking, not personal financial advice. Tax rules do shift from one year to the next, so always get proper, regulated advice before making major decisions. Take care of yourselves, look out for each other, and I'll see you in the next video.